Hello students, today in this lesson we are going to see the format of balance sheet of a banking company, and that is given as per the third schedule of the Banking Regulation Act. And we have already seen in the previous lessons, that is Form B pertains to the profit and loss account of the bank, and Form A relates with the balance sheet. Okay, so in this the schedules 1 to 12 are related with the balance sheet, and hope you remember that is in the case of profit and loss account of a banking company, it is from schedules 13 to 16. So the capital and liabilities, the first one is capital is schedule number 1, and we shall see, first we'll see in brief what are the components of capital and liabilities, and later we'll see this items in detail. Now capital is schedule 1, reserves and surplus is schedule 2, deposits schedule 3, borrowings schedule 4, and other liabilities and provisions schedule 5. So the liabilities, the capital and liability items, the capital and reserves and surplus constitutes the capital, and deposits, borrowings, other liabilities and provisions relates to the liabilities, the external liabilities of a banking company. So schedule 1 is capital, schedule 2 is reserves and surplus, schedule 3 is deposits, schedule 4 is borrowings, and schedule 5 is other liabilities and provisions, and you'll find out the total for that. And of course for this also you'll find out or you'll be disclosing the current years and the previous years figures. Now coming to the asset side, the first item will be cash and balance with Reserve Bank of India. So we know that it is often obligatory or mandatory for the company, for the banks to maintain cash with themselves as well as with RBI. So all such cash with them and balance is maintained with RBI, the cash reserve ratio and all, that will be included under Schedule 6. And balance with banks and money at call and short notice, that is the balance of cash with other banks. That is, if other banks have borrowed from our bank, then the balance with other banks. And money at call and short notice, now we know that it's a type of money market instrument, and this refers to the borrowings of the banks from other banks in case of deficiency. So if it's to be regarded an asset, then this bank would have lent out to other banks, then only it will be regarded as assets. Okay, so balance with other banks, and it and the money it has given in the form of money at call and short notice, that is Schedule 7. Now all the investments of the bank will be grouped under Schedule 8, advances under Schedule 9. That means all the loans are assets for the banker, no? So all assets, like all loans, will be shown as advances. And now the fixed assets owned by the bank, other assets, Schedule 11, and by that we'll find out the total of the assets. And now contingent liabilities and bills for collection. Contingent liabilities, you have a schedule number, that is schedule number 12, but that's not part of balance sheet total. That you will just mention it. It's not part of balance sheet total. And bills for collection, those bills which are entrusted with the banker for collection. So till that is collected at the end of the accounting period, if some bills are lying as bills for collection, that is if someone has entrusted the bank to collect that, then that can be shown there and without any schedule number. It doesn't have any schedule number. So these are just like footnotes to the balance sheet. Okay. Now schedule number 1, capital in detail. That is for nationalized banks, capital fully owned by the central government. That is what part of the total share capital is owned by the central government, that you can show. But in problems, you won't come across all these things. Okay, just the share capital will be given to you. For banks incorporated outside India, that is the startup capital as prescribed by RBI. That is in the case of foreign banks, those banks which are incorporated outside India are foreign banks. No, for them, prescribed capital will be defined by RBI, and that should be shown separately. And any amount of deposit kept with RBI under section 11(2) of the Banking Regulation Act, that should be shown separately, and total you will find out. And for other banks, for other types of banks, you will show it as authorized capital, issued capital, subscribed capital, called up capital. Just like the share capital of any company, you might have learned the balance sheet of companies, joint stock companies, just like that you can show it. Less calls unpaid and add forfeited shares. So less calls unpaid. If any calls are remaining unpaid, that should be deducted from the capital, and you can add forfeited shares if any. That is the cancelled amount. If any amount has been provided by the shareholders, that can be shown as the forfeited shares account. Now, reserves and surplus, all types of reserves and surplus, that is, we have seen statutory reserves. For that you have opening balance, additions during the year, and deductions during the year. For all the reserves, this will be the common format. So of course statutory reserves will be there. Then the capital reserves, securities premium, revenue and other reserves, and balance in profit and loss account. For all the types of reserves, you have to first show the opening balance and later the additions during the year, and if any deductions, if any, can be deducted from that, and you can show it under reserves and surplus, and you will take the total. And now the schedule 3 is deposits, that is the various forms of deposits. That is the bank has mobilized from the customers, demand deposits, then savings bank deposits, term deposits, all types of deposits can be shown here. Okay, and you will take the total. And next comes the borrowings in India, whether it be Reserve Bank of India, other banks, and other institutions and agencies. So under assets we have seen this, that is balances with other banks, and money at call and short notice, we have seen that. So if our bank has advanced that will come under asset, and if our bank has borrowed, it will come under borrowings. Okay, so borrowings in India, Reserve Bank of India, other banks and other institutions and agencies, and borrowings outside India also you can show if it's given. Total you can find. And now other liabilities and provisions, like bills payable. If there are any bills payable, inter-office adjustment, credit balance, liability. Credit balance means a liability, no? Interest accrued, that means interest which you have to pay on the various deposits which is not yet paid. Others, including provisions. So all other liabilities and provisions can be grouped here. And now that's all with the liability side. And next comes the cash and balance with RBI. First is cash in hand, you can show. That is cash in hand with ourselves. That is cash in hand, and balance with RBI in current accounts and other accounts. Usually such splits won't be given in the question, just the balance with Reserve Bank of India and cash in hand with the bank will be given. So you can find out the total. Now balance with banks and money at call and short notice, like balance with other banks, that is balance with banks in current accounts, other deposit accounts, money at call and short notice. Everything outside India, if it's given as a split up, you can show that also. So balance with banks and money at call and short notice. Next is the investments. That is, as every banking company, they'll be mobilizing deposits from the public, and that will be given as loans to the customers. But a big chunk of that will be invested in the infrastructural facilities and all with governments. The banks will deposit. So all such all such investments can be shown under investments, like government securities, other approved securities, shares, debentures and bonds, subsidiaries or joint ventures, others. So all sorts of investments, long-term investments that the banking company makes out of the funds mobilized will be shown as investments. And now investments outside India, if any, you can show it. And now the advances, all the advances, loans and advances given by the banks are treated as assets. No, they are assets as such. And under that, all types of advances like loans, bills purchased and discounted, cash credit, overdraft, loans payable on demand, term loans, all such things can be shown. And if priority sector advances are given separately, you can show that. Public sector advances differently, if it's given, you can show that. And so that's all about the advances. And now Schedule 10, fixed assets, that is premises, that is which all fixed assets that the business, that the banking company is using for the banking business, that you can show at cost, additions during the year, deductions during the year, depreciation to date. Usually how we show the different assets, like that you can show. And any other assets including furniture and fixtures can be shown. And now next is other assets, that is inter-office adjustments, debit balance if any, you can show it as other assets. Inter-office means inter-branch transfers and all. Interest accrued, that is, if you have to receive that becomes an asset. No, tax paid in advance, tax deducted at source, everything. Then stock of stationery and stamps. This you will usually have it in the problems. Stock of stationery and stamps will be shown as other assets, because for various documentation purposes, the bank will be using, or banks will be having stamp papers, stamps, stationery and all. So such stock can be shown as other assets. Non-banking assets, we have already seen this, the meaning of non-banking assets, that is, which are acquired in satisfaction of claims. That is, if the customer is not paying the amount, if he is making the default, such assets will be seized by the banker, and that can be shown under other assets. And any other assets, if any, it can be shown that. So that's all with the significant items in the balance sheet. And now it's the contingent liabilities, like those liabilities which may arise in the future, like claims against bank not acknowledged as debt. So they are just claims until and unless the bank acknowledges that, it remains to be a claim. It's not a debt. So it will be treated as a contingent liability. Liability on partly paid investment, like any other company, the partly paid investments are contingent liabilities until it is fully paid up. Liability on account of outstanding forward exchange contracts. If the banker has entered into some contracts which may become due in the near future, and if there is any liability on account of that, that can be shown under contingent liabilities. And all guarantees given on behalf of constituents in India, outside India, those are guarantees. If the other party makes default in the conditions, then only the liability of the banker will emerge. Acceptances, endorsement and other obligations. That is, as a banker in international trade, the banker will have to give guarantees, acceptances, endorsements to the customers. So such things can be grouped under contingent liabilities. And other items for which the bank is contingently liable. So these are the items which will come under the items in the balance sheet are these items. And now we'll just see once again, that is Form A. That is, we have discussed in detail each elements. Capital and liabilities. That is capital first. In the order of permanence, they have given capital and liabilities. Capital first, then comes reserves and surplus. By that, the capital items are over. Next comes the deposits, borrowings, other liabilities and provisions. You will take the total assets, cash and balance with Reserve Bank of India. First, what we have in our hand and with RBI can be grouped together. And balance with other banks and money at call and short notice will be grouped separately. Investments, advances, fixed assets, other assets and contingent liabilities, and bills for collection. So as we have earlier I have already mentioned that contingent liabilities and bills for collection is not part of the balance sheet total. They will be just mentioned as footnote. Okay, thanks. Thank you for your patient listening. Have a good day. Study the format only, then you can proceed with the problems. Okay, if once you study the format, things are going to be really easy, because you won't get much adjustments in this module. Okay, so please learn the format first, then it's going to be really easy for you. Thank you for your time. Thank you for your patient listening. Have a good day.